if the customer isn't buying your product, then you've got to change that product somehow. You've got to figure out why it's not solving the problem that you think your customer has. You cannot control the opportunities and threats. And so you have to give yourself permission and room to react to them throughout the course of the year.
Today's episode is extra special because I get to introduce you to someone who has been a total game changer for me and will be for you too. Meet Cheryl Heller, CFO. Cheryl isn't a typical CPA who just files taxes and calls it a day. She's a strategic CFO, which means she helps entrepreneurs, investors, and developers like us not only make sense of the numbers, but actually use them to grow. She spent years in the trenches working with everyone from small business owners to multi-million-dollar real estate investors. And she has this rare gift for breaking down complex financial concepts into language that you can actually use to make better business decisions. Cheryl doesn't just look backward and see what's already happened. She helps you look forward. She will show you how to measure what matters, see the pitfalls before they swallow you, and build a kind of financial systems that actually support your vision as a developer. So buckle up, because today we're pulling back the curtain on the financial side of development with Cheryl Heller at the table. So you're about to see the numbers in a whole new way and meet my great friend, Cheryl. Cheryl, welcome to Real Estate Developer Discussions with Katie Kim.
Katie, it's so great to be here. I always love when we, get to talk and go into the nitty-gritty details on all this stuff.
I love it too. And as I said before I hit record, listeners, we were talking about, Cheryl's journey and the developer and where she goes with her business. And I said, we should have just recorded this. It was so good. And so I know you're just going to have an amazing episode. So we're going to dig in first to Cheryl as a developer. And we were talking about developer and the different phases and the different product types. And a lot of times developer can be a value add type of investment and into development. So we're going to start with Cheryl with our developer 5, and then we're going to go a little bit more into the journey about what she does. But before we start that, Cheryl, give us a little bit of background on you and how you arrived to today.
Yeah, so I, like you said, have a background in finance and accounting. I spent over 25 years in financial services, working for really large companies, household names that you would recognize. And about 7.5 years ago, I took a break from that and started working with small businesses. And I really love that aspect of it because it allows you to sort of get in, roll up your sleeves, and see your decisions get implemented really quickly. At the same time, I got much more into my real estate investing that I do myself. And so really have kind of expanded that side of what I do. And so I love the combination of bringing my finance background to all of the real estate investing and developing that we're working on. So
awesome. What is your main focus when you look at investments? What's your buy box?
I look for short-term rentals in drive-to vacation locations.
Yes. And you guys have a great partnership that you invest with, because Cheryl will send me pictures of cocktails on the table and say, we just had our investor meeting. I'm like, my investor meetings, well, they look somewhat like that, but aren't as great locations. So
yeah, this is myself and my husband and another couple, husband and wife, and we've been investing together for 15 years. And it just works, right? We have a common goal that we're working toward, and we each have our strengths in what we do within the different investments. And so we do get together usually once a month or every 6 weeks and go out to dinner and talk about our strategy and what we need to work on and all of that. So it's a great friendship as well as a partnership around our real estate.
Awesome. And I think it's great. And I love when you use the word strategy, because there are so many things when we dive into that you'll see, and the listeners who know me know that I'm a big strategy person. I always want to know where my exits are, what is the strategy, how do we double down? So let's get to our first developer 5. So what's one deal that looked great on paper, but almost broke you?
I think that would have to be our very first investment that we ever did. So this is before that partnership group. And my husband was like, we should invest in real estate. That'll be cool. We had no idea what we were doing. And so we called our real estate agent that helped us buy our house that we were living in. And she was like, oh, yeah,
Mm,
there's this condo for sale. Like, she's not a real estate investor, so she didn't look at it from that perspective. And
mm.
we didn't know how to look at it from a real estate investor perspective. And it was one of these where we were self-managing. We were getting called in the middle of the night because the, toilet was stopped or the, shower drain wouldn't work. And we weren't making any money off of it because we didn't know how to run our numbers. And so after a couple of years, as opposed to getting a divorce, we just decided to sell the property. So
Well, that's a great decision. That's a good strategy there.
yeah. And we were sort of out of real estate investing for a while because we had really been burned. And then
Mm.
the partners that I was mentioning earlier came to us and they're like, hey, we think we want to invest in, short-term rentals. Do you want to explore this with us? And we haven't looked back since.
Was their first response no, or was it what would that look like when they asked?
It was, what would that look like? And
Mhm.
they picked a place. So we started investing, and we still have property in the Outer Banks in North Carolina.
Great
And we
area.
also spend time there on vacation as well. And so we knew the area, and they were like, "Hey, we've just discovered this area. Like, we should." And we were like, "Oh, well, we know. We go there on vacation, and so yeah, that makes sense to us that people would like to go there on vacation." So.
So you knew the location, you trusted the partners, you had somebody else in the game. Had they done real estate investing before?
Very little, like kind of
Yeah.
dabbled in it here and there.
Okay.
Yeah.
And so I think it's awesome that you got over that burn and the initial scar. And a lot of times our first deal is exactly what you said. We jump into it. We don't know what we don't know. Sometimes that's a good thing, sometimes it's a bad thing. And then you figure it out along the way, right? And sometimes it creates lasting scars that, I would never do this again. So what lessons did you learn from that deal that you wish you would have known sooner in that first deal that you did?
Mhm. I mean, I think just all of the underwriting, right? And knowing how to evaluate a property and knowing how to understand, how much do you have to invest in it? It's not just your down payment, right? But what are the things that you have to do on a regular basis to maintain the property? And what happens with vacancy, right? It was one 3-bedroom condo. And so if the person moved out, we couldn't get in there, somebody in there for a month or two, like we were paying the mortgage. And so
Mm.
how do you kind of think about that holistic view? And that was really the big thing for me, was like learning how to run the numbers and what all that meant.
Yeah, when you say like single tenant, I'm always like, oh, I love me some multi-tenants. I love multi-tenants. When we moves out, somebody else, and your cash flow is going to adjust, right? When somebody moves out and you're switching tenants. But that's one thing when we do projections, we don't ever put, even when it's stable, right? When it's stabilized in that sense, we don't ever show more than 90% occupancy because
Mhm.
somebody's moving out, something's happening. You're never going to get 100% unless it is that single tenant, triple net lease, somebody's putting their business in your building and they're securing it, right? I mean, that's probably the only time. And yeah, and you don't know what you know. And one of the things I think people try to do when they do projections is, well, it could be this, it could be that. And half the
Mhm.
time, if I'm being sold, well, if it could be that, why aren't you doing it? Like, talk to me about this. Like, do you not have the skill set? Do they not know what they're doing? And don't sell me the pie in the sky, because we can make the pie in the sky all day long. It's just show me the
Mhm.
real numbers, like do the math, follow the money on that. So where in that process, because I'm sure, and we won't go in that because we don't want to talk about the divorce and the challenging and the marriage with another episode, but where did you lean on faith or say your gut instinct when that logic said it wouldn't work? Like, what was that like? I really started to learn to listen to my intuition.
Mhm. Well, so it's interesting. So I wouldn't say from that first deal, but the more, I learned and did the research and had that background, and then also our partners, like I'm very risk averse, having that kind of accounting and finance background. And our partners take a lot more risk than we do. And so I've learned working with them over the years that it all balances out. And so
Mm,
I have become less risk averse, but as long as they think that they're like, yeah, it makes sense. It's not too risky. I'm like, okay, like I need to kind of shut that piece off in myself and
Mhm.
trust. It's like what is it, the masses, the group think around it, and making sure that we can, that I'm not being too conservative, that as a
Mhm.
group we think it's a good investment deal.
Yeah, and it's fun to have partners that are in alignment, but yet have different skills and assets that they bring to the table,
Mhm.
like, and I'm sure people listening when they first started would be like, wait a second, a CFO invest in real estate? Because there's a lot of CFOs and accountants and CPAs that don't, like mine doesn't. If mine listens to that, she'll always tell me like, I'm good with renting. And then she sees the good, the bad, the ugly with all of her clients too,
Mhm.
right? And so there's a lot of lessons learned. And I love that because I love to rely on my team to bring me back to tell me why I'm being too conservative. Tell me why I'm being too aggressive. Like, let's think this through. And it's a safe environment on that side. So, knowing you went from there, then what's one thing that you do to protect yourself and really your legacy
Mhm.
that every new developer should know? Whether you're working with them on like a real estate advice or in your business, what would be that one thing that you would say, you got to do this? Because I preach doing the reps, like what you just said, is the more you do it, the more comfortable you get some scars, right? And those kind of tweak your comfort level, but it's the reps. You got to get in the game. So,
Yeah, and I would say there's probably two things for me. So
mhm.
first, it all comes back to the data, right? Like looking
Always.
at, the market data, or the, rental history, or the, looking at the electricity bills so that you can kind of predict going forward what that is, or in your business, looking at your competitors and how they're pricing their products, things like that. So really using the data to inform your decisions, and then looking at the risk. So making sure that you're managing the risk in the right place. And I'm not saying that you need to, like, have it all buttoned up and don't accept risk. Like, part of being a business leader is to know what risk to accept and what risk to mitigate, right? And so,
Absolutely.
making sure that you're making those active decisions as opposed to taking on the risk because you didn't take the time to think it through.
Yeah, because a lot of times we want to jump into the deal and we don't necessarily then think about like it's so exciting or this is going to be a game changer and we don't think about running the numbers. And so I love it you bring that back. I always, me, I'm follow the money, follow the math. I got to do the math before I can sit in it in for a second. So um looking at that, if you could pull up one more chair at this table who needs to hear your story and why, who would that be?
So I am really trying to focus on getting out to women entrepreneurs that
Hmm.
are have this sort of the fear of the finances, the fear of the numbers, and helping
Love
them
that.
sort of understand the data and use the data to make their decisions with no judgment,
Hmm.
right? Like we're not here to, make you feel bad because you didn't look at it before. We're just here to start from where you are today and go forward. And so really that in that sort of 7 to 9 figure business or investment portfolio, women entrepreneurs, that's really who I'm looking to work with.
Awesome. And we're gonna and I wanted to really focus on getting those five out the way because and Cheryl doesn't know it, but she teed up exactly what I want to dig into with when we talk about like before you break ground, you got to break down those numbers, right? And as you just mentioned, working with women business owners, I love my women business owners that I work with. And I love when you said like fear of finance because I hate when I hear I can't do math. I can't do math. You can do math.
Mhm.
Everybody can do math. 2 + 2 = 4. If you got that down, you can do the math. It's now what math do you need to do? But also, I want to go back to a couple of things you said too with how you work with business owners is looking at the finance because as you know, I work with a lot of business owners that want to grow. They want to get their business to that next level. They either are renting a space or maybe they're owning and want to expand. Usually it comes with some kind of expansion. And as you've said, like we get questions coming to us in a different way, and they're not the right questions, right? I always get we're in 3,000 square foot, I need 5,000 square foot. Do you? And let's go back and see, like, how is your space right now? Is it efficient? But then I do something different when I work with business owners that I love, because we share this and we are gonna collaborate more. I can tell you that because I already have a couple clients we're gonna collaborate on, is that I have to go back when we talk about business. And so this episode specifically, I want to dive deeper into businesses that want to develop,
Mhm.
because there's that additive of you always need to expand before your business is ready. And so really want to dig into when you start to look at those numbers, because I mean, I'll definitely chime in with how I'm looking at those numbers. I had multiple of those conversations today. How do you like make sure the foundation is strong before you start to build the building, right? And I
Mhm.
mean that in the financial sense and then the literal sense of the development. So, and listeners, this is gonna go probably rapid fire to a big conversation, because I know I just unleashed it, and this is where you're gonna see the energy and the fire of Cheryl right here. So
Yeah. So, I mean, it's such a good question, right? Because when I start working with a client, like the first thing I like to do is look at the history, right? You have to
Mm,
know where they're coming from, and
yes.
then and understand like what the overall goal is. Where do they want to get to? Where do they want to take the business? And why? Like, what's driving that goal? Because a lot of
Mm,
times I'll talk to people and they'll say what that their like goal A is what they're looking for. And then the more we like dig into that, I'm like, well, is that really what you're trying to do? Or are you trying to do this over here? And they're like, oh, yeah, like that makes a lot of sense. And so, really sort of getting underneath their like what they
mm,
want to do, what their goal is, what their end, like what you said it earlier, what the exit strategy is, right? And so,
mhm,
trying
mhm.
to figure that out, and then you can work backward from there. And then you kind of build up from the historical data and bring those two together, and then you can put your plan to go forward.
Okay. So, okay, I have so many things. I'm giddy here. Okay. So, love that, because I literally was doing projections for a couple of my clients today, and in asking those questions before you get and asking the questions before you get into the numbers, right? It's almost, you've heard me say it tons of times, slow down to speed up, right? I have to know where you've been, where you're going, where you want to be, and what does that look like for your business, your personal, and your family, right? And those questions, I know when you answer them, you're wanting that same roadmap, right? It's that exact same roadmap. And so when you look at, for example, a business is about to expand, right? And they're looking at either production lines or office space or however they make widget X, right? And they could make widget X, Y, and Z, but maybe Z is not a producer, but yet now you're going to create this whole plan around building out widget Z where it doesn't make you profit. And I know that what you do is come back and look at that, like, where are we not strong? Where do we need to, if we start to grow this company,
Mhm.
this is going to be a hole. This is going to take you under. This is going to be your Achilles heel. So, what are some like metrics, or what are some like things you look for? Because there's a whole strategy in where do you want to go with your business? How does, and for me, I'm inserting, how does real estate play into that, right? And then the whole tax structure that I think we're going to have a whole separate on that side, because
Yeah.
there's so much fun. Um, in that there is fun, guys. It is fun. And but looking at, a lot of times people are either told or they hear the latest gimmick of this is how I need to position my company, or this is how I grow. And sometimes we have to untrain that brain to
Mhm.
say, okay, no. Let's look at you, like your business. So when you step into those, are there 3 to 5 things like a KPI that you really look at first in their financials and how they're structured?
Yeah, so so KPIs are going to vary on industry and what specifically their goals are, but I think one of the
Yeah.
first ones that I look at is gross margin. So gross
Mm,
margin is you take your revenue and subtract your costs that are directly related to achieving that revenue. And then you have your gross margin there, and you have that as a percentage of your revenue. And the reason why you want to look at that is because that is really telling you how much it costs to produce whatever product or service that you are providing, right? And then
Mm.
after that, you do, your like office rent and overhead salaries and all of those sorts of things. That's what it takes to run your business. But really, you need to make sure your products are profitable. And
Mm.
so, if to your point about like they might want to make widget X, Y, and Z, if they can't determine how much it costs them to make that product, then they don't know how much they need to sell it for to make it profitable. And if they know how much they need to sell it for because that's what the market can bear, but it's going to cost them more than that to make the product, then it's not worth
Yeah.
it to sell it. Now, there is
Mm.
something called a loss leader, right? Sometimes you sell a product at a very low margin or even a little bit of a loss because it gets people in the door, and then they'll be more apt to buy your higher margin products later. That's totally
Yes.
fine, but you need to do that on purpose. You shouldn't just be
Yeah.
selling a whole bunch of low margin products because that's what you're doing, right? Like you have to have
Mm.
that strategy there. You have to know how much it's going to cost you to produce those products. And so, like you're saying, if they're trying to build out a piece of property and they need to know how much of their space to invest in producing the different products, well, they need to figure out how much those products are going to cost them to make and how much the market can bear. And another thing that I often talk with my clients about is product market fit. So if the customer isn't buying your product, then
Mm.
you've got to change that product somehow. You've got to figure out why it's not solving the problem that you think your customer has. Like it's one thing
Mm.
for everybody to sit around in a conference room and say, well, we're going to build this product or service because we see this problem out there that we
Mm.
want to solve for people. But if
Yes.
people aren't willing to pay for that solution, then there's no sense in building that product, right? You've got to understand what your customers are willing to pay for the products and services that solve their problems before you spend all the time producing them. Because what you don't want to end up with is a warehouse of widgets that nobody wants to buy. Because conceptually it might solve a problem, but they're not willing to spend the money to solve that particular problem. It's not so much of a problem. It doesn't cause them enough pain.
Yes. And that's perfect. And a lot of times business and entrepreneurs go and they say, oh, well, this would work well. And here's my idea. And they lean in so far to that idea, they don't take their customer feedback, right? And when you're talking about that gross margin and shifting, a lot of times when I see on the development side, when businesses level up, whether it's a 10x, 5x, 20x, whatever you're leveling up to, right? Is when you go from where you're at right now, you may be analyzing the data and the numbers with your numbers as you're doing it right now. So maybe it's a process that has more labor, and now you get into the space and you're going to buy a couple pieces of equipment, and now your labor goes down, but you then have to cover the cost of the equipment. And so it's looking at the business side of the finances as you step into those developments in that bigger space. And as you said, start to look at those numbers from a strategic standpoint, because they may shift, right? They may shift with, better equipment, outdated processes. There's a new technology, all those things. Because to me, when I look at those businesses expanding, I love how you're looking at it as like, I'm going to let you know when you can grow, right? Like, I'm going to let you know we can step into this now, and here's how we're going to step into it. I look at it as, if I have to take you to a bank or investors, are you bankable in your growth?
Mhm.
And I think that that is something a lot of times business owners get paralysis by analysis, because they look at it together. They look at it as like the business and the real estate are one entity, and it can be. But what I look at is, if you're going to need to bring investors in to grow your business, bring them into the real estate versus the business, if possible. If possible.
Mhm.
Sometimes it has to be the same, and there's instances. But when you look at that, looking at like, okay, if you're now going to double your rent, how do we logically and systematically show that growth that you can obtain absorbing that rent? And so sometimes I'll have the business go back and say, in the last 2 to 3 years, if you would pay this rent, would you have made a profit?
Right.
Just start there, right?
Well, because the bank is going to look at that, no question, right?
Yeah.
If they need to take a loan out to do the development or to get into the new space and then to buy the equipment, right? Like they're
Mhm.
probably, depending on the type of equipment, they're going to want an equipment loan. And so the bank is going to look at how much debt can their revenue support. And if they are not making enough revenue to support it, they're just going to keep getting a lot of no's.
Yeah.
If they don't have the right kind of financials, if they can't show that promise in their growth, then nobody's going to lend to them.
Yeah. And it's making the business bankable, right? It's
Mhm.
making them being able to say, yes, we can go get a loan because we can handle this debt service and coming back from that strategy. And I love that. What are some of, I'm going to say, rookie mistakes for businesses when they want to grow? And it's like, if I could tell every business owner that's wanting to grow or step out of their comfort zone, here are the top, I don't know, give it to me like 3, 5 rookie mistakes that you're like, oh, this would change the world if people stopped doing this.
Mm, yeah, I think, and so I'm going to say is like this, these are like two sides of the same coin, right?
Mm.
Either overextending themselves or
Oh,
being too conservative on what they need. So get into a space that's too large for what you need right now. You invest in, building out your team, you buy a lot of equipment, and you just like your production isn't there. You're not getting the orders in the door to support all of that. You've
yeah.
created, especially with if you have a very large rent amount and a very large payroll, like you've created this fixed cost that you
Mm,
have to sustain with
yeah.
uncertainty of revenue. And it's not flexible to go up and down, right? Like for example, if you needed more people, let's hire some contractors first, some part-time people or some, let's
Yeah.
bring in consultants or something like that, as opposed to hiring people on staff, because that way you can flex with the need. So you're not creating an extra fixed cost. You have a variable cost that you can
Mm,
bring up or down, or like seasonal employees, right? If your business
yeah.
is seasonal, right, you hire for the season so that you don't have that fixed cost. On the other side of the coin, it's waiting too long, right?
Mm,
So if your space is too small to produce the amount of product that you need to produce, if your team is too small to get the work done, and you're going to burn out your team, your customers are going to get frustrated with you because they're not getting what they want on time. And so really there's this sweet spot of like expanding just enough at just the right time. And it's hard. But
yeah.
like I think either being too conservative and under expanding, or I don't want to say too optimistic, right? As an entrepreneur, you have to be optimistic, but
Yeah.
too like your eyes are bigger than your stomach and expanding way too quickly.
Yes. Yeah. And I usually get brought in the pain part when people have waited too long.
Mhm.
Katie, we are busting at the seams. We need something tomorrow. Well, here's the thing. If you're going to go into existing space, that's one timeline. If we need to build a new space for you, that's a completely different
Mhm.
timeline. And I loved when you said, you know, your sales are not in front of you, right? You said it in a different way, but in essence, like you have too much debt, too much fixed cost for
Mhm.
the revenue that your business is bringing in, right? So, what I love when we work with business owners that want to go into new construction or they have a substantial renovation, that it would really, in essence, be a new construction timeline. Okay. So, you leverage that, you put the plan in place, you make sure the financials are there, you get your sales projections. And then you start selling to those new projections during the construction cycle, right?
Mhm.
Communicate, manage how that works and is delivered. But now you're starting to build up that backflow while you're in construction. So when you turn the lights on, you're running at full speed.
Yeah.
And if you are a business that is like, we're growing so fast, we don't know where we're going to be in 5 years, much less 3 years. One of the things that I like to do is you can build a bigger building. And this is why I think I go back to separate the business and the real estate. Well, one of many reasons that I think we can do as a separate thing, but like, is the fact of if you do the building separately, you can also build more space that you rent out to another tenant that would be your profit, but your business covers the lion's share of those expenses. And now you just don't renew that lease for that tenant and expand your business to the next suite over, right? Or a couple suites over.
Mhm.
And that I think is a different strategy. And if again, you slow down to speed up, or we started of where do you want to go and why? And I think a lot of entrepreneurs are just like want to go, 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 go. And not a lot of people challenge their thinking. And that's what I love about what you do and what your team does at the Pillar One Consulting is that you slow down to speed up to know where you're going so you can let the numbers from the past guide what they're doing today, guide how they're going to grow in the future, what is smart growth, and what can allow that company to take those chances that, like you said, they may be a loss leader, but it's a marketing tactic, it's a marketing strategy, it's getting more people or different people in the door that then would maybe flow into a more stable product for them to release. So
Yeah, I think that's super important. And I love your strategy of it's almost like house hacking, but for commercial real estate, right? Like you buy something that is bigger than you need, and so you let somebody else help you pay your mortgage. Um,
yes.
and really, and the other thing too that I think is so important is this like, and it made me think of it when you were talking about like the pre-sales, like this
Mm.
execution mindset, right? So sometimes you get into this with entrepreneurs and they're like the idea people, right? And they're the
Oh,
visionary
yeah.
and they want to do they want to write the next great pitch deck because they're so excited about what they're thinking about and they want to go out and talk to investors or banks and like bring people along on their idea. But then when it comes back to actually like putting the product in the hands of your customers, you can't get out of your own way. And you keep like
Oh,
it's like you keep having all these new ideas. And so you keep changing your mind as to where you want the product to go, or like, oh, let's just tweak it over here. Let's make this one change. And then the team that's trying to do the execution for you gets so fed up. They're like, I don't know where you want to go anymore. Right. And so, it's that visionary entrepreneur, which like we all need, like businesses all need, right?
yeah.
But
Oh, yeah.
then you have to harness that ability to execute
Mm.
and be focused on your task to get it done and get your product into your customers' hands.
Okay, that's so good. So good. So good. So I'm going to ask a loaded question. So how do
Have
you
I experienced that before?
Yeah. I think Cheryl is comfortable knowing that I'm never going to ask a question that she knows she can't tell me no to. But then she's a little scared when she said yes, because she's like, oh crap, Katie's going to ask me all the questions that I. So with that, how do you go about, I don't want to say reining it in, because we don't want to rein in our customers, our clients, because I think, and for example, I'm going to be very cautious not to say the name. So if we do, we have to edit that out. But one of my clients has built her business to just take off. Like
Mhm.
she is at the crux of just, I'm going to say 10x so each year over the next 5 years that I can see. And I'm not even through all the math. Okay. So I take a deep breath on that. Right. And she is still doing, I don't want to say a lot of weed work, but she is doing a little weed work, right? I know when we put her in that position, when we start to structure and systematize the company and get into this next phase, I'm excited, scared for her and the company. And she goes, what do you mean by that? And I said, because you've done this much with your product and you are, you're still doing this and doing that. And entrepreneurs do it, right? It's like the typical E-Myth in bold, right? We're still the janitor, we're still this. So we pull ourselves out of that to be able to grow and focus in that zone of genius, whatever you want to call it, in my flow. And I said, I'm scared because I'm trying to help design and lay out a building for your business. And I know you probably have 20 ideas in there that are probably gold mine, but you probably have 30 that you've thought about and you're scared to share them with people because of that. Like I would say, herd the cats, right? Oh, she's got another one. She's got another one. She's got another one. And you're trying to kind of hold yourself back so that your team doesn't get scared and they do stay focused. And I have those entrepreneurs that then when you're trying to design the building and the business plan, you're kind of like, I don't even know what's coming down the pipe because like I know you're holding back, right? So
Mhm.
how do you step into those growths on the financial side of it?
Yeah, I think it's again, it's another sort of like thread the needle, right? Where you have to understand there has to be some sort of conceptualization of what this big vision is, like what are all the things that could happen. And then the way I like to do it is to help the founder, the entrepreneur prioritize, right? Okay, so what are we going
Mm,
to do first, second, and third, right? And that thing that we say we're going to do third, that third might be 5 years down the road. So I don't want you to talk about it in front of your team anymore.
pin it, just put a pin in it.
Like,
Yeah.
like we put it on a list, put it in your drawer, like we'll get to that soon. But
Mhm.
really what the team needs to focus on is, step one and maybe a little bit of step two. And so
Mm,
allowing them to have that outlet of like, somebody to talk to about all their great visionary ideas, but then
yeah.
creating that structure of, what we're going to do first, second, and third so that they can really focus with the team, making sure that they have somebody that will be able to manage that execution in a very productized way.
Love it. Yeah, keep the main thing the main thing. And
Mhm.
then we could incrementally start to head to that. And I love when you were saying of, maybe start to work on two, maybe three. We're giving you that roadmap. We're giving you that way. And I like to know that list for me
Mhm.
because if now that thing that maybe a couple years away requires more space over here, can we build it now? Can we flow in? So I take my entrepreneur brand, like I want to peek behind the curtain, right? Like I want you to tell me what you're going. We're not going to share it with everybody else because again, sometimes that stresses them out, like what you're saying. So just give them the 1, 2, but it then allows them to help them dream. And as we talked about, my favorite multi-tenant is saying, okay, we may want another space, we may want this, we may want that. And how we've been really good with those businesses that are growing is there's another strategy where it is design, build, lease with an option to buy. So now, when we're working with some of those businesses that are expanding and we're going through the design and creating other tenant space for them, and they're putting their cash into building their company, right? Like as you mentioned, sometimes you need more workforce, sometimes you need equipment. We put it into the building, right? Get that funded, lease out to other tenants, and now the business can grow with their comfort level inside the space
Mhm.
and either then expand to another space or buy the building, wait a couple years and then expand into it. And we found a lot of businesses love that because they get almost the best of both worlds and they do what we all love to do is control. They have control. I want
Yeah.
control all the way through,
Yeah.
right?
Yeah, I think that's so important. I think the other thing too, to like working with these visionary entrepreneurs is always tying back to their mission or their vision, right? And
Mm,
so like making sure that whatever ideas they're going after are
yes.
clearly tied back because you want the team to be able to, execute within guardrails and parameters, and they have to
Yeah.
understand what that vision is in order for them to understand how to operate within those parameters. But a lot of times, if you know what the vision or the mission is for the entrepreneur, and they're like, oh, I had this idea, and you're like, really? Tell me how that does this. And then they're like, oh, yeah, well, it doesn't
Or tell
really.
me the profit margin. Tell me, follow the money. Tell me the money. Tell me, does this
Right.
make you money? Yes.
Well, and not even just that, but does it align with where you said you wanted to go? Does it
Yeah.
align with your endpoint? And it might make you a lot of money, but if it distracts you from your endpoint, do you want to really spend the time on it? And
Mm,
a lot of times they'll come back, or they might say, actually, you know what? I think it's time to change that endpoint because this thing over here that I just thought of actually is going to be way better, right? But having that conversation and not just letting them keep putting things on the list, making
yeah.
sure that it's in alignment and that they understand if they're pivoting. Because to me, that's like I'm always trying to get people to say, like, make your active decision. Don't just let something happen because you didn't have the conversation or didn't make the decision, right? Like that's the worst scenario to be in.
Yeah.
You want to be places because you've actively gotten yourself there.
Oh, I love that active decision. So, okay, my brain, is like when you just dropped a lot, and I don't think people are going to realize how much you just dropped because this morning when we were going through with the client is to like why I need to know, like, how much of this do you have to sell, how much you have to store, and there's a process, there's an aging process in it, and how much you have to store before you can make money and sell it. And looking at how I dig into her business, it was, here's how I'm bringing it back to the numbers, right? Here's
Mhm.
how this is going to help me understand, guide, design your space, look at your cash flow, look at your cash stack, and what you just said too is keeping that strategy. And sometimes the strategy adjusts. Like, now pivoting, and you pull up memories of the first thing we do when somebody joins the Real Estate Development Academy is we do a strategic roadmap onboarding session, and I do it with them. I don't have anybody on my team do that because I want to know exactly that. I want to know, where are you going? We talk about the time, talent, and treasure triangle. How much time do you have? How much talent? How much, like when you're talking about your fix and flips, you didn't have the potentially, you didn't have the time to manage that strategy.
Mhm.
And with that, is it in line with your risk tolerance? Is it in line with your goals? Is it where you want to be? And so I think a lot of times people get into, I want to invest in real estate because so and so said I should, or it's a good write off, or it's a tax strategy. And it's like, okay, but which strategy in real estate do you want to invest in? Which
Mhm.
development option and strategy do you want to use? And then it comes back to, I think, of the non-technical investor. I mean, he's great. He's an engineer. I love him to death. And he's like, I want to do fix and flip. I'm like, you are the most like what do I want to say, mechanically inclined engineer I know. I don't think that's a good strategy for you, right? And so he was like, why so? And you step into that, it may be a good idea, but it may not be in alignment with you. And I think that I know that word gets used a lot these days, but I think that alignment is key. And once certain projects are done, or once you hit a milestone, as you said, you have to reassess, right? That's why you set different goals for each year. You look at the goals throughout the year. Like, there's times when we've set a goal and halfway through the year, another opportunity comes that we are more in alignment with, and it changes the whole strategy for the year.
Right.
And you have to pivot, right? Or you don't have to pivot, but you would want to pivot and give yourself that permission to change focus and change direction.
Yeah, and I think that's so insightful too, because in this there was another podcast that we were talking about recently, and they were talking about goals, right? And the theory behind it is the one person doesn't believe in setting goals because
Mhm.
they think it limits you in what
Yeah.
your potential is.
Yeah.
And like I was always of the mindset for years and years and years, right? You set your goals in January and December, you look to see if you achieved your goals.
Mhm.
And, and then you get into the middle of the year and things happen, right? For good or for bad, right? And so
Yeah.
how do we believe that we are so, have so much insight and foresight that we're going to be able to tell with absolute certainty what's going to happen this year? We don't. So you have to give
Mhm.
yourself permission to pivot if something
Yeah.
else happens. Like, and do it in a planful way, right? We often talk about a SWOT analysis, right? Strengths, weaknesses, opportunities, and threats. Strengths and
Yeah.
weaknesses are internal to your business, your company, like what's good and what do you need to improve. Your opportunities and threats are the external factors that are, getting forced on you by things going on outside.
Mhm.
And you can control a lot of the strengths and weaknesses. You cannot control the opportunities and threats. And so you have to give yourself permission and
Mhm.
room to react to them throughout the course of the
Mhm.
year.
That's actually a great way to look at SWOT, is what you can control, what you can't control. And
Mhm.
when you're looking at your business, you have to be able to pivot. You have to have the team that can pivot with you and can adjust with you. And like you said, how do we think that we start one way and don't end up another way? Like, right? I think of college, right? When people go into college, they start with one major. And if it's like me, I think I changed twice. I may have changed three times, but and come out the other end. And then half the people don't even use what they got the major for in college anyway.
Mhm.
So, okay. Like, and yet we don't think that we have permission to pivot in our company. And I think that's the best gift, is if somebody needs a permission slip for pivoting, we're going to give it to you right now. That's your permission slip, guys. You can pivot. Ladies, get to work on pivoting if you need to, but don't beat yourself up about it. Don't beat yourself up and say, well, my goal for this year was this, and now I'm pivoting here. You're pivoting because you should, right? And that's where I think people, whatever their product is, you're constantly tweaking it. You're constantly listening to your audience, listening to what sells, look at the numbers. And I find that when people are in those growth modes, or even let's go with scarcity and abundance, you look at your financials differently, right? So a
Mhm.
lot of people, when they're in scarcity, it's either, to me, it's extremes. I look at my finances every day. I haven't looked at my finance in 3 months because I'm putting my head down and I'm lead generating and I'm building revenue, right? And you're like, okay, let's bring it back a little bit. But having those different personalities when you step into business, and I think that's where one of the things, and I want to wrap up this episode, but I know we're going to have you on again because there's so much more and so many more questions. But in looking at that scarcity and abundance, I want to take a second and talk about like the three ways you really, I'm going to say, show up for your clients, because you have a, CFO in a box, right? Then you have a, I'm going to say, hold your hand CFO. I know you're going to put it differently, so please do. And then you have a all in. So can you talk about those three ways and also tell our listeners how they can learn about you and find out about those options?
Yeah, so the CFO in a box is a new product that I've been developing, and it's really for those folks that are not quite ready to work with a CFO, but they want to get their heads around what does a well-managed company look like from a finance perspective, right? And it goes through accounting policies that you might need, standard operating procedures. What should you be doing on a daily, weekly, monthly basis in order to keep track of your finances, cash flow statement, those sorts of things. And that would be something that somebody could purchase, and they would be able to use that on their own to make improvements in how they look at their finances. And
Mm.
then we have a monthly subscription where we're doing actual CFO reports. So you might have a bookkeeper, that runs your QuickBooks and that makes sure everything gets recorded correctly. But you're looking at your P&L and your balance sheet, and you're like, it doesn't really tell me a whole lot. Well, this tool will take that information and it will put it in a visual way for you to take a look at your trends over time, track your
Mm.
KPIs, and
Mhm.
see in with sort of graphs and charts in a way that might be easier to understand, and that might come with some quarterly or monthly time with a CFO to help you sort of understand and walk through what these reports are telling you. And then there's the full-on consulting, right? So fractional CFO, strategic advisory, the way that I work with my clients today, really like part of their leadership team sit in on their strategic growth discussions and help them really take their business to the next level.
Awesome. Awesome. And we are excited, and full disclosure, that center option, that sweet spot of taking the reports and really giving us those visuals in those charts, not only for our business, but also looking at for our developments and for our asset management and our investor groups. So I'm excited to really get Cheryl into our business and our portfolio as well in that way. So where can people find you online?
Yeah, so I am on all the socials, either Cheryl Heller or Cheryl A. Heller in all of the places. And yeah, you can email me as well, Cheryl at Pillar One CFO. So it's PILLARONE CFO.com.
Awesome. And we'll put those in the notes and in the comments so you can reach Cheryl. And we're definitely going to have Cheryl back, because looking at this, it really goes in a sense beyond the build, right? It really looks at, a couple notes we wrote down was for entrepreneurs who aren't just chasing projects, they're chasing building empires, right? And I think that's really what we started to touch into. I know what you're passionate about. You're passionate about people being protected by the numbers, but also being empowered by the numbers. And so making sure that you're setting your clients up for success. And I know that's where we're in alignment as well. And I want to just say thank you for coming on today. And we'll definitely have a Cheryl on a lot more, because I'm sure we'll have a lot more questions. And if you do have a question for Cheryl, put it in the comments below. I know she'll be checking it, and it will help us know if there is a topic that you want us to talk about with Cheryl, to let us know so we can bring her back on for that. All right.
Thank you
Have
so
a
much,
great day.
Katie.
Thanks. Hey, friend, before you go, I want to say this. If real estate development has been on your heart, or in your mind, we've built lanes to help you walk it out wherever you're starting from. Just exploring? Start out with our free live masterclass. Ready to do the reps and build the strategy? Join the Developer 101 Bootcamp. Already active and need to level up? Step into the Real Estate Development Academy. You don't have to figure this out alone. We can teach you, we guide you, and we walk with you. So head over to katiekim.com and book a call with our team today, and let's figure out the best first or next step for you. You're not behind, you're not too late, and you're definitely not too early. You're right on time. Let's go. The information in this podcast is for educational and informational purposes only. It is not legal advice. It's not financial advice. It's not investment advice. Real estate development, like any investment, carries risk. Before you make decisions, you should always consult a licensed professional, your attorney, your CPA, or your financial advisor, to name a few, to make sure you're making the right choice for your situation. I'm here to share insights and strategy, but you're responsible for your own decisions, and each situation is unique. So make sure you contact your professional team to give you your specific guidance for your specific case, as each real estate development's different and unique and has its own challenges and opportunities.